Whoops.
For many of us, 2020 was the hardest year of our lives. Australia is still reeling from the economic and social impact of the COVID-19 pandemic. However, the pandemic has accelerated the push towards a digital economy and empowering Australians through technology. More of us are working from home more than ever before, choosing when we come into the workplace. We're using video calls and other communications tools to save time and get more done. One sector critical to the nation's ambition to be a digital economy is the Fintech sector, and its growth through the pandemic has been critical to the economic recovery. It's employing thousands of Australians already and growing rapidly. It's also transforming the way we manage, save, and spend money. Australia's largest emerging companies are Fintechs, and they are drawing overseas investment into the country. Many, like Afterpay, Zip, and Upbank, are household names. But crucially, they are helping everyday Australians get smarter with their money. They are teaching them how to save, plan, and capitalize on every dollar they earn. Fintech is slowly but surely changing the way we think about money in Australia. Not only is it directly contributing to our economy, but it's making it stronger. Here at Intersect, we're discussing this future and asking the big questions. We'll be hearing insights from new voices in the sector and giving a platform to some of the behind-the-scenes talent that have put Australia's fintech industry on the map. So sit back and enjoy Australia's most thought-provoking conference, Intersect.
Welcome to the Australia Investment Webinar run by Austrade, which is a part of Intersect's digital program run and hosted by Fintech Australia. My name is Rebecca Shotguppy and I'm the CEO of Fintech Australia and your moderator for today's session. The digital program is an opportunity to extend our reach and showcase the latest fintech trends, policy developments, or companies at the forefront of new technologies or products for those that cannot attend the physical event or purchase a virtual ticket. We'd like to take this opportunity to thank our major sponsors, the Victorian Government, Austrade, Xero, BPay, and Data Action. I would also like to thank our digital sponsors, Manuva, BDO, Argyle, and Q2. I would now like to welcome our special guest, Minister for Superannuation, Financial Services, and the Digital Economy, Jane Hume.
Hello, and thank you so much for that introduction, Rebecca. It's terrific to be here. Hello to everybody, and thank you to Fintech Australia and to Austrade in particular for the opportunity to participate in today's discussion as a guest speaker. So I'm very proud indeed to be Australia's Minister for Superannuation, Financial Services and the Digital Economy, and is also Australia's first Minister for Women's Economic Security. We've seen that very important role that technology has played for both Australians and, of course, Australian businesses during the COVID-19 pandemic. We know that digital technologies are an important part not only of getting through the pandemic, but also the recovery on the other side. And this is why I was very, very proud to announce, as part of this year's budget, a $1.2 billion investment on Australia's digital economy strategy. The digital economy strategy is in a living roadmap that, like technology itself, will evolve over time in order to meet our vision for Australia to be a leading digital economy by 2030. It's an important part of that strategy too is aimed at attracting talent and an inbound investment. And it's also about promoting Australian businesses and strengthening our international reputation as a leader when it comes to being a fair and democratic society with strong regulatory frameworks. So, for example, as part of the digital economy strategy, we've announced a 30% games industry tax offset to attract inbound investment and support local industry and talent, which of course will have a significant flow on through to other sectors as well. We're also investing $124 million in artificial intelligence initiatives to boost productivity and to grow the next generation of experts. $111.3 million will also accelerate the economy-wide expansion of Australia's consumer data right, which we've announced already that telecommunications is going to be the third sector and the next cab off the rank in our economy-wide consumer data right. Because of course, although our CDR is based on open banking in the UK, the CDR was established with a view to it being rolled out across all sectors of the economy. And indeed, we would be the first jurisdiction to do so, and that's to maximise consumer benefit. It will create an extraordinarily powerful opportunity for startups to build innovative products and services that will enable customers to get a better deal, to use from energy, from telcos, and from providers well beyond. So through the Digital Economy Strategy 2, the Morrison government has committed to working in partnership to develop an Australian data strategy. Now, this builds on work that's already underway, for example, on the consumer data right, and also in the government's digital identity platform to ensure a holistic approach to use and regulation of public and private data to unlock value. Australia has a geographic advantage in our proximity to the ASEAN region. The significant opportunity for UK fintechs that are looking to expand to leverage Australia's strategic local partnerships. The similarities in governance and also in regulatory frameworks between the UK and Australia has meant that there are some deep relationships now forming and that have already formed between equivalent regulators, the Financial Conduct Authority and ASIC here. And this has really paved the way for fintechs to access our respective regulatory sandboxes and for referrals for fintechs to be licensed in each other's jurisdiction. It's also important from a consumer perspective to have UK companies enter the Australian market to ensure that we have access to products and services that are available to consumers in other leading nations. So just yesterday, I had an opportunity to meet with Go Cardless, an extraordinary organisation who leveraged the UK-Australia Fintech Bridge when looking to expand into Australia. And they now have a presence in my hometown in Melbourne, in fact, just down the road from my office. And it's a practical example of the ways in which the Fintech Bridge has been inviting global innovation and talent and creating jobs right here in Australia. Equally, there's an opportunity to support Australian businesses to scale globally, for example, through identifying opportunities to influence standards and settings and also create cross-border interoperability and data flows. We hope to develop a fintech bridge with Singapore, similar to the one established between UK and Australia, which I know since its launched in 2018 has enabled so many companies to grow and operate across borders through that access to regulators and to customers and also to investor networks. So in addition to the beneficial changes in Australia, in addition, we have beneficial changes in Australia that we've announced in the budget to employee share schemes. And the Morrison government has committed to reviewing those investment incentives, such as early stage venture capitals, limited partnerships, to better understand how we can increase the deal flow and access to capital to help Australian startups to scale. So in conclusion, I wholeheartedly believe that there is much value to be unlocked, both for the UK and for Australia, by strengthening our relationship and encouraging fintech expansion between our two nations. Thank you very much for the opportunity to join you, albeit very briefly today in your webinar, and I hope the rest of the session goes exceptionally well.
So much, Minister Hume, for joining us today, and we really appreciate your involvement and your engagement with the fintech sector. I would now like to introduce our panel this afternoon, this evening, and the morning for the UK. And the panel we have today is Jonathan Hatch from ASIC, as he's the Senior Advisor and Lawyer in the ASIC Innovation Hub. We also have joining us Ian Polari from KPMG, and he's a partner and the Global Fintech Lead. And we have Stephen Mullen from Swoop Funding, who's the Head of Strategic Partnerships Manager. I would now like you to each give you a little bit of an introduction on yourselves, and then I will kick off with a few questions, if that's all right. I might ask Stephen first.
Thanks very much, Rebecca. My name is Stephen Mullen, as you said, from Swoop Funding. We are a very recently launched UK fintech company into Australia. We launched in March, and we are a fintech platform that allows SMEs to find access to finance across business loans, equity investment, grants, and savings, all via one marketplace using your financial technology or your financial information.
Thank you. I might hand over to Ian.
Good morning, everyone. As Rebecca mentioned, I am a partner at KPMG. I established our global fintech practice about 6 years ago, and also from a domestic standpoint, lead our banking practice here. I work across the full spectrum of the financial services industry, working with large incumbents who are looking to identify relevant fintech that can help accelerate their digital transformation agendas. Have spent time working with regulators and government agencies as well around some policy areas that would again unlock the opportunity from a trade, investment and jobs perspective. And of course have worked with a number of domestic and international fintech companies as well.
Thank you. And Jonathan.
Thank you, Rebecca. I am Jonathan Hatch. I'm Senior Advisory Lawyer, as Rebecca mentioned, within ASIC's Innovation Hub. I'm basically where you want to try and engage if you want to speak to ASIC or work with us around different engagement points. Have a lot of understanding. I've been working in this area for some years now, so open to different people approaching us. And of course, good morning and good afternoon, depending on where you are.
Thank you. Just to set the scene a little bit for everyone online, in Australia, we have about 700 fintechs. 80% of those fintechs go B2B. We've recently seen an increase in profitability. So 78% of Australian fintechs now are post revenue and 30% of them are profitable. We've seen incredible growth in the space over the last year with the likes of Zip, Afterpay, Upbank, Athena and Wiser all making record profits. Our major sectors in Australia are payments, lending and wealth management, but we're continuing to see a rise in the crypto space. And that is an area that the government is looking to regulate. Markets that our Australian fintechs actually look to launch into are the UK, the US, Canada, New Zealand. Some of the policy reforms that we've seen over the last year include 1 July CDR launching with banking, and there's still a way to go on that policy front for allowing intermediaries into the system and further extending into the likes of super, insurance, energy and telco. But we're making some progress in that space. We're also seeing at the moment a consolidation of our payment rails with EFTPOS, BPay and the MPP coming together, and we're recently seeing more fintechs get connected to the fast payment rails. We've just seen a positive change in R&D tax incentives to actually stimulate the economy, but there's more way to go in relation to software. So I just wanted to give everyone a little bit of a general landscape of where the fintech sector is in Australia. We've obviously have 4 main banks similar to the UK's 6 big banks. So we have a very similar banking market. So I might head over to Jonathan to ask the first question today. Can you give an overview of the regulatory architecture in Australia?
Sure. I'll do it very quickly because the Minister did mention it briefly, but the high level structure is similar to the UK for those coming in. We have ASIC, which, though I'll start there, is in the center of the universe. We are the focused body on the conduct regulator. Traditionally, we've also been the company house equivalent, though that is now over the next 2 years moving to the ATO. And we are working with a range of different parties as a part of the broader regulatory regime. For banking and prudential, it's Australian Prudential Regulator, APRA. There is a privacy regulator called the OAIC. There is the regulator around the central bank, i.e. the RBA, and they will do some of the major payment rails and things like interest rates. And of course, you also have a range of small bodies managing other areas which come in, such as competition, which might touch on certain points or certain conduct, depending on where you particularly position yourselves, and the normal other regulatory bodies. Fundamentally, what I think people need to take away from this is it's a very similar system based on the Westminster system of law. A lot of the regimes will have similar natures, but if you do want to understand things better, please reach out to either people like myself or others here who can better inform or guide you through the regimes.
Thank you, Jonathan. Ian, I'll now head to you for the next question. We've noticed a proliferation of fintech incumbent partnerships recently. Is this a sign of fundamental change in the way established financial institutions are engaging with fintech?
Look, I think it is true, and I expect that to continue, Rebecca. I think certainly the experience, and I say post-COVID, and on the basis that we clearly sort of get vaccinated across the market, but certainly the behavioural shifts we observed through COVID, which again were sort of by and large accelerating trends that existed beforehand, but the move to online, obviously a lot more e-com and online transaction activity is really forcing the banks to consider how they can integrate more quickly with third-party providers. We've seen a number of partnerships announced over the last 3 or 4 weeks around specific vertical plays that relate to providing greater and richer experiences for SMEs. From a consumer standpoint, clearly had a lot in the consumer finance space. Obviously a lot of discussion around the buy now, pay later trends and developments. And, I guess what we've also observed as banks respond, we've seen the sort of deals that CBA did with Klarna, finding a high conviction play with an established player offshore and looking to pursue a strategic objective through that sort of partnership. But in short, I think there is really fertile territory in the context of where large institutions are. And I think fundamentally it is recognizing, if they're smaller, getting access to talent's becoming extremely difficult, personified through, the lack of mobility in terms of getting access to international talent to our shores. And I guess the other dimension to it is the window, which is closing around certain facets of the market. So I think they're organizations that need to either catch up or accelerate to seize a particular opportunity, know that the quickest way or a quicker way to get there with a degree of conviction is partnering with fintech companies. So I think the build by partnerships are certainly core facets of the thinking, and I expect to see more banks, insurers, wealth managers procure services from fintech. As you mentioned in your opening remarks, still a heavily dominated B2B market, and I expect that to sort of accelerate over the next 12, 18 months.
You completely touched on a very good point, and we'll be exploring this over the next 2 days at Intersect. And I think even a great example is the recent partnership between Open and Telstra. So it's not just, fintechs and banks, it's fintechs and telecos and fintechs and energy providers. And we're seeing this more and more in the Australian ecosystem. And I'd echo Ian's comments in relation to that. I just want to encourage all the attendees before I head over to Stephen, if you have any questions, please log them in the chat and I will get to them. Stephen, can you tell us about the Swoop story? You've managed to establish and grow the business in the midst of COVID-19 and associated travel restrictions. Can you take us through Swoop's journey, please?
Yeah, it's been an interesting one. As you mentioned there, Rebecca, we launched having never met any of the team during the biggest global pandemic across the other side of the world, across our hugely challenging time zone. So it's been very interesting. But I suppose to take you through that story, I mentioned what we are. We're a small business support platform for finance for small businesses and advisors such as accountants looking to get finance for their clients. To do this, we have developed a financial data exchange platform. So you can come on, you can put in your company, make up a bit about your company, but you can connect your cloud accounting software, you can connect your bank account through open banking in the UK, and I'll touch upon that, what we're doing with that in Australia at the minute. But then from there, our matching system provides tailored recommendations across loans, equity investments, grants and savings across FX, utilities, etc. But for the makeup of the company, Australia was identified as a really natural fit. And some of the reasons have been mentioned already. We talked about the share history, the regulatory environment, and of course the digital infrastructure, which was a big part of the recent budget. But as well as that, it has a very healthy alternative finance, so a non-banking finance industry. The likes of Prosper, Moola, Judo, to name a few, have been making big strides against the big banks. And I suppose this environment really was a very attractive reason why Swoop came here. So we decided to do that after a lot of research. We were launched, swoopfunding.com.au was launched around March time. And from that, we spent a huge amount of time building up our panel of lenders. I mentioned the banks, non-bank lenders. So we have 45 different lenders on the platform at the minute. So we had to go out, we had to get the products, upload them onto the system, and make sure SMEs coming on are getting matched to the right loans, cost, invoice finance, asset finance, etc. But we also had to build out our BC, our crowdfunding, our family office capability, to have those options for SMEs coming onto the platform. And the final element was the Australian business grants landscape. So we had to build out state grants, federal grants. So that was a huge bit of effort. But thankfully now we've got to a stage where volumes really building up on the platform, and we've already helped hundreds of SMEs across to find finance across those areas. And now that we're kind of in Australia in particular, we're really coming out of COVID-19. Thankfully, we're seeing a real need to get access to those finance options. And suppose just to make a final point about the journey, some things that have been really good and really proud of so far is we've helped Australian companies find investment. So we helped a recent wealth tech company find or close a round of $3 million via working with Swoop, us making introductions to VCs and family offices. So we've done a lot over the last few months, and we're really excited now to keep growing in Australia.
It is such a wonderful story, particularly in light of the pandemic. I don't think many businesses have been able to set up in a new location completely remotely. So it's a huge testament to you guys at Swoop. I touched on it briefly before, CDR in Australia. So CDR launched 1 July last year. It has launched in relation to transaction accounts, and it has really started to wind up. I think we now have 10 Fintechs accredited and the 4 major banks as data holders, with Regional Australia Bank being our other data holder. To set the scene, all other mutual banks are meant to be online by 1 July, but I expect that will be extended to November. We're still waiting for some further rules, which I also talked about before in relation to intermediaries. And intermediary access, as shown in the UK, will actually allow for more Fintechs to get involved into the regime, because essentially at the moment the cost of compliance, connecting, and the audit requirements are too large for Australian Fintechs to take the punt to become an ADR. We are making a lot of progress with Treasury and getting the rules to a state that they need to be to allow more businesses to connect and test MVPs with accredited data recipients, but we've got a way to go. But there is amazing opportunity for established companies in the sector to launch here. The CDR is meant to be world leading because we will have telecom, energy, super, and insurance, and everyone will be able to run algorithms or apps over the top of them, and to give everyone a complete picture of their financial wellness, but also enable them to switch or find out their best products or rates for them as an individual. But now I want to ask Ian a little bit more about what he's seeing in the space, and what are the recent developments in CDR that really stand out for you?
Yeah, look, and then obviously there's been another consultation amongst a range of topics, but specifically looking at payment initiation. And I think it's been sort of slow and steady in the context of, information exchange. But, I think it's inevitable that payments will come into the fold. I do think the area that probably excites me the most, which I think has the more immediate potential, is in the SME segment. I think we all know, and many SMEs in Australia, it's a pretty well trodden path to sort of have either Xero or MYOB or other accounting software providers. So we already have a large portion of SMEs in Australia that already freely sharing data with third parties. There's a fair value exchange that's well accepted. And so I think the fact that that is customary for most business in Australia to undertake that data sharing is something that I think allows that receptivity to new propositions, other problems that could be solved, other business opportunities that could be unlocked for small businesses. And the other dimension to this is, small businesses tend to be more multi-banked than consumers. And so an ability to help them understand different alternatives. And I think it is reasonably complex for most small businesses. Most small businesses, typically are pretty focused on solving the next problem or whatever the strategic objective they have to hand. And so I think the financial services industry in of itself has complicated this with a number of different product services, whether it's working capital loans or, merchant cash advance or receivables financing, secured term loans. Ultimately, most businesses just want to get something done, get it done reasonably quickly. And so I think that the CDR and open banking, I think, presents a real opportunity for us as an industry, and to sort of see, I think, a number of fintech companies to support, and benefit from, I think, that pathway that's pretty well accepted for a lot of SMEs. So I think the other dimension to this is, I think, post, COVID, again, just to refer to it in that context, we know that a lot of businesses and a lot of households, notwithstanding the sort of, short-term dynamic that we're all enjoying with low rates and, pretty strong demand across a range of different sectors, that I think fundamentally there's still going to be an important proposition to lay both at households and businesses, that is to help them save money in categories of expenditure. Financial services, energy, telco and IT are clearly major expenditure items. And so the CDR being extended to those other sectors, I think, again, also presents a great opportunity to help households and businesses to save and to get a better deal from their providers.
Thank you, Ian. I might ask you a question off the cuff.
Sure, go for it.
There's a lot of talk in relation to MPS and Pay2, and then there's a lot of talk about CDR payment initiation. Do you think that the MPS Pay2 will replace CDR payment initiation, or CDR payment initiation has to be payment rails agnostic?
Look, I guess I'm probably not going to comment on either of those. Just if I can declare sort of, I'd prefer to just sort of allow that to sort of play out in of its own right. But I do think, the logic in helping a business or a consumer or household to understand their financial position, to help them achieve a particular outcome, do so conveniently. Obviously, the security safety is just a critical element of the trust equation in any sort of data sharing regime. But helping an individual to make an informed decision is one thing. I think without the payment initiation, we're clearly going to fall short of actually realizing the benefit or the intended benefit. And so I think that is just inevitable. Now, the mechanism by which that's done first, I guess the market will dictate. But I do think payment initiation will be something that will be introduced. I understand the sort of logic in allowing the information exchange to be adopted, but I think it's only inevitable that we'll see payment initiation brought in as well.
I think you hit the nail on the head when you said that we will only see the real innovation when payment initiation starts, and I think that's critical for the innovation in the sector. Jonathan, I might come back to you. A lot of companies are interested in the UK Fintech Bridge. The regulator to regulator dialogue is part of that. What sort of interactions have you had with the FCA, and how has that helped boost fintech activity between the two nations?
This is one of the interesting ones for us because it's been going for some time. There's actually been a few different versions of this bridge. Overall, the continued engagement working closely with them. Many of those in the UK would probably have already engaged with the FCA in different ways. They have a slightly different model to us, but we find we can still work quite closely on a continuous basis. In fact, I'm meeting with them immediately after this on something else with a more academic capacity. So there's definitely close relationships on different topics. The important bit I'd probably take for industry here is that we focus on engaging and understanding what's going on in the local regime. And when there is, say, someone wanting to transfer across, we can work between the regulators, which can do things like expedite licensing, help facilitate better understanding on both sides. And if you've actually engaged with one regulator, it often can have a degree of context that can come with you across through the bridge of saying, this is what this entity is doing, this is how it's worked with our regime. And we know their regime somewhat, not as well as they obviously would, but it means it's much easier for us to have an informed conversation with an applicant who wants to go and say, well, we're looking to do this, we've done this in the UK, how can we work with you to make this work here? We also have a lot of general conversations around cutting edge areas, such as anything from quantum and AI, of particular interest to me, or the blockchain side, where we are engaging understanding development so that when something does move across between the bodies, say a UK startup wanting to come here, or vice versa, an Australian one wanting to go to the UK, there is a degree of openness because we have that understanding of where the different regimes and environments are up to.
Thank you, Jonathan. And Ian, I'm just going to head back straight to you again. What are some of the qualities of international fintechs that have been able to successfully establish and scale in Australia?
Yeah, I mean, I think it's sort of a lot of it does start and stop with the quality of of the management team, and I think sort of human capital is a really important facet of it. So clearly looking at individuals who are seasoned, that have got some experience under their belt, doesn't have to necessarily be a success, but obviously the learnings from endeavors. I think taking the time to really focus on solving a legitimate and in-demand area, I think is really important as well. I think it's sort of one where sometimes the eyes can be a little bigger than the stomach, and so I'm a big advocate, and I think those that succeed are those that have an absolute focus on solving a specific problem or market opportunity before sort of broadening too quickly. And I think the third thing I would say is looking to form the right sort of partnerships, either from a distribution or from a capability standpoint, clearly can help accelerate the time to realizing benefit for international players coming into the market. And if there's probably one thing, it's sort of again, I think the market's really looking for tried and tested capabilities. I think RegTech's a really good example of that, clearly, given the benefit of, I guess, perhaps a more mature RegTech environment in the UK and a reasonably equivalent regulatory philosophy across our regulators in the UK, as Jonathan touched on, that, I think incumbents are looking for players that are proven. And so I think that's an important facet in that particular area.
Thank you, Ian. Stephen, I might ask you about your experience in relation to licensing in Australia. So how did you find the experience of obtaining relevant licensing?
Yeah, I'll go into a few of the different licenses that we have got already and that we are in the process of getting. I suppose for people who are listening in from the UK or further afield, it is a very, very important area. So I'll try and go into as good bit of detail as I can as possible. I will caveat everything I'm about to say by the reality that we did launch Swoop in Australia with our founders and directors being in the UK. So there was a lot of back and forward of getting things signed, documents signed, scanned, and passed back. But hopefully it would come out of COVID. No one else will have to go through those trials and tribulations. But funnily enough, our biggest problem should be the easiest, but it was actually registering as a company. So acquiring an Australian business number, an ABN number. We found that the system, I don't know what happened, but the system online wasn't working for us when we went to do it. So we actually had to go through paper-based. So we had to get wet signatures and hard copy authentication from the founders. And we had to courier the documents from the UK to Australia, to an Australian address, and then have them hand-delivered to the Australian tax office. But given we were in the middle of a pandemic and there was basically a lockdown, this was quite challenging, more challenging than it probably should have been. But that's a unique circumstance. But then we went on and we applied then for our ACL, which is an Australian credit license, and that's with Jonathan's organisation, ASIC, which we thought maybe would be quite a complicated process. But we actually found that our assigned advisor, who I suppose our account manager that we're dealing with, was really, really helpful, helped us walk through, was be able to be on the phone or via email at any time, and made it quite easy for us to do that. So had to be very complimentary of the team there. So the process took about 6 weeks from start to finish to get our Australian credit license. We then moved on, or before I move on to the CDR license, I think it's worth mentioning, and someone mentioned it already, ASIC's Innovation Hub. Swoop didn't take advantage of the regulatory sandbox, which allows companies coming into the country to test innovative financial services in Australia without having an ACL for 24 months. So if you are in the UK, you are part of a financial services body or a company that wants to expand here, I would recommend checking out the ASIC sandbox because it seems like a great initiative. But in regards of...
It's a very good plug.
That's not the end of it. No, in regards obtaining our Australian CDR accreditation, so getting our open banking license essentially to be able to handle consumer data in Australia. We are in the midst of doing this at the moment, and our CFO is leading that. But I asked him yesterday when I was coming on this, how is that going? But he said that actually having applied for similar accreditation in Ireland and a similar accreditation in the UK, that he's found that applying for this one in Australia is a bit more straightforward. But he has mentioned as well, because he has went through that process, and I think Jonathan mentioned that as well, there are a lot of similarities broadly between the two, that he has done it before, so it is a bit easier for him. There are a number of things I will point out that are similar across Ireland, the UK and Australia. So for example, you'll have to have an audited information security assurance report. You'll have to have relevant insurance to cover risks associated with handling CDR data, and you'll have to have something like a detailed corporate or organizational structure clearly defined across whether you're going for it in the UK or Australia. So that's some of the journey that we're being on, and some memberships and some licenses that we have got. Others, just quickly to name check, we are members of the Australian Financial Complaints Authority, which is really vital for any of the partnerships and any of the licenses, and being involved in the lending space, the mortgage lending and commercial lending space. We're members of the Mortgage and Finance Association of Australia. A lot of the banks will ask for any of the partners in that domain to have that. But the last point I'll make in regards memberships and licensing, and I think it's a very important point, is when you go for any of these licenses, you go for any of these memberships, you have all the regulatory reporting and insurance that I talked about, but you actually have to build the application around an individual. So that individual needs to have a lot of experience in the Australian finance industry. We have an executive director over here who has been CEO of our mortgage aggregator. He's been in Big Four banking for decades. So he had some of the licenses in the past. He has the experience. So any scrutiny or any tests that were put against him, he passed with flying colours. So if you're going to come out here, make sure you have someone to build those applications around who's done it before, knows what they're doing, and you'll save yourself a lot of heartache in the future.
Thank you so much for such great insight and very detailed advice there. I'm going to actually head to an audience question instead of asking the panelists some questions by me, but this one was directed at Jonathan, but I'm actually going to open it up more broadly because I think everyone might have a bit to say in this space, particularly Ian. Is the Australian regulatory industry and ecosystem prepared for the growth in fintech with the introduction of CDR? And does the Australian RegTech sector have any gaps? I might just quickly note that in the digital budget that Senator Hume discussed earlier, that there was additional money for the rollout of CDR, and part of that money is to provide Treasury and the ACCC with the resourcing they need to not only develop the rules in other sectors, but to resource them to allow for more accreditation and other things. So I would like to note that the government is investing heavily in that space, but I'll hand over to Jonathan to provide a little bit more detail.
All right, at a super high level, I was going to say that firstly on the gaps, I'm going to go from the back of the question forwards. There obviously are going to be certain gaps in certain spaces. I find that fintech startups and RegTech startups don't actually look for gaps. They might touch on that, but really they focus on doing something better than anyone else. And that just means you may disrupt someone that's in your way. The focus in the RegTech space is trying to be more compliant or deliver better consumer outcomes. Fintech space is delivering more, better, whatever, improved financial products and services. Again, just because someone may be doing it doesn't mean they're doing it well. So entering the market is still an option for you if there isn't a gap. With respect to the regime more broadly, I think there's always going to be the potential, and I was going to actually type a message to you to say we could chat and discuss this more, which I'll do after. But the short version is There's a lot of capacity in the regime that would allow for growth. There is a range of things that can happen. Now, in the Innovation Hub where I work, we do deal with a lot of startups. Some of them become very, very big, very, very quickly. Now, that doesn't mean that the sector, the systems and the regime doesn't allow for it. It just may mean that as you become more fundamental to the economy, if you get really big, you may have a few additional obligations, but we're talking about extremely big, like bank size. So there's plenty of capacity in the system to handle it. I think what you'll find is that you'll probably want to be pushing ahead of the regulatory system as it works through any adaptations that the government may choose to bring in the future, but the others may want to add more.
Ian?
Yeah, I mean, I think Jonathan's right. I mean, when you look at the RegTech sector in Australia, I think we do have a fairly representative group of players here. I think that they're now sort of by number about 70 or 80 RegTech companies. I guess like anything, it's sort of a question of, as I made the point earlier, how many of them sort of post-revenue have got proven credentials with banks, potentially offshore. And hence, I think that is the opportunity, certainly from a UK or even from a Northern Hemisphere perspective, where I do feel that there's more examples of partnerships between RegTech companies, and I think the regulators have been a little more assertive around their endeavours. So the likes of the Monetary Authority of Singapore have been quite proactive from an international perspective around the adoption of RegTech. So we've seen a preparedness for them to be more actively engaged in some of the proof of concepts or exercises. As an example, sort of looking at how an industry utility could be set up and deliver a level of industry KYC clearly has a lot of sense to it. And so that to have the Monetary Authority of Singapore along with Fintechs and a few incumbents really looking to participate in those sort of exercises, I think is an important ingredient to accelerating the adoption of RegTech. I guess, are the regulators prepared? Look, I think, I think there's, Jonathan mentioned a number of regulators earlier. Look, I think they're all at different stages of preparedness. Obviously, the Council of Financial Regulators, of which, ASIC is a member, clearly is looking to promote a greater level of coordination. And that's going to be really important, I think, particularly with CDR, where you've got a number of different regulators are focused on different aspects of the regime. I mean, we clearly see some level of risk around lack of coordination. I think that's understood. And so I think that is an important call out that we've got to see all of our regulators really focused and challenged, I think, to continue to help foster, the sensible introduction of innovation as it relates to their particular areas.
Thank you, Ian. And Stephen, do you have anything to add?
Yeah, just a very quick point. RegTech is not a speciality of mine, but I just want to pick up on one of Ian's points about the Australian SME sector and Australian economy in general. Their adoption of Xero and MyOb plugins, and even the likes of Ilion, it's so widely spread in Australia, and that's one of the key things that we've been really surprised by from the UK, because it's a complete education piece in the UK of getting people get used to CDR, get used to passing with their data. So what I'm trying to say is, I think in Australia, as CDR improves and gets better, there's going to be quite a flood of people utilizing it. So the regulator will have to be ready, which is a bit of an insight from company coming over from the UK.
I definitely think they're preparing themselves. Like I said, there is a lot of money in the budget to make sure that they have the resources that are necessary. I might ask one more question from the audience before I go back. How much focus is there on digitization of trade? This will expedite funding to SMEs and medium-sized enterprises.
Look, I think depending on, if that's sort of a domestic response. I mean, I think we have seen quite a number of places. Stephen mentioned a few fintech companies in the SME segment that are predominantly there to help funding SMEs or mid-sized businesses. We've also, interestingly, I think, perhaps the first wave of fintech partnerships that didn't really translate were between some of the big banks and some of the unsecured lending platforms. We have seen some of the incumbents, build their own equivalent services. But, again, I sort of look at lending origination as a category. I think there's enormous opportunities there. We've seen the likes of Tyro, prosecute, a deal with Mambu where they've implemented that capability. We've seen Encino with the likes of Macquarie. And so I think that's encouraging that, I think our banking community recognise there are some, I think, well-established fintech companies that have proven themselves in lending origination or credit decisioning. And so, I think that is a good area for UK fintechs to focus on. I think the other dimension of this, and again, we've seen quite a bit of activities is in the payment space as well. So I think you touched on that during your opening, Rebecca, around faster payments, and then you overlay the CDR, as Stephen's spoken about as well. I think the SME mid-market is a really fertile opportunity.
Thank you, Ian. And Jonathan or Stephen, do you have anything to add to that one?
Just a quick one from me. What we also have seen over here, talking from a Swoop perspective, is that some of the fintechs, lenders, non-bank lenders, are being really, really quick to get to decision. That's something that's been really, really good, and a lot quicker in Australia than it is in the UK. We have an average decisioning time to fund trade of up to 50, 60 days in the UK, and it's literally a week or less than a week for a lot of the fintechs over here. So there is definitely a real need, or a good level of supplying trade very quickly in Australia.
Great.
I'm sorry, Rebecca, just one more point. I think one of the other areas that I'm observing is, the banking community here has had a strong DNA pedigree in secured lending. And so I mentioned unsecured lending, but I do think there's an increased appetite around, receivables financing, merchant cash advances, so other forms of working capital provision. And so businesses that have, supported banks or can help banks in the context of extending their capability in those areas, I think will also get a good hearing from incumbent players as well.
Well, ironically, you say that. We've just had Lighter Capital launch in Australia, and I know FundSquire is looking to get into that revenue lending as well. So I think we are going to see more and more of that come into the market. So I've been asked to set the scene a little bit on how you can engage with the Australian ecosystem. And so I think one of the best ways to come to Australia is with a partner, whether that be a professional services firm like KPMG or coming with Austrade or UK DIT. I think launching with a partner often helps, or a banking partner for the likes of Klarna with CBA. Another way to engage is obviously through Fintech Australia. Fintech Australia is, for the people on the call, the peak industry association. And we have a range of service providers that we can connect you to if you do choose to land here. But more importantly, we have great relationships with ASIC and the other regulators that we can connect you in. So if you are interested in coming to Australia, my team at Fintech Australia is more than willing to have a meeting with you. But I also know that, Ian and his team at KPMG will help companies launch in Australia. Sorry if you all heard my notification there. And I know the team at ASIC and the Innovation Hub is more than willing to be contacted, not only through the FCA, but directly. But my advice to anyone launching here would be to come with a partner, whether that be a professional services firm, a bank, working with Fintech Australia, a fintech partner, or even Austrade or the likes of UK DIT. Stephen, you've obviously been through the journey. So what advice would you give to UK and Ireland companies looking to enter Australia? And did the UK FinTech Bridge help you?
I think you referenced a lot of my answers there in your introduction. So yeah, aside from the likes of Fintech Australia, KPMG, ASIC, DIT, I have to give a shout out to Enterprise Ireland as well. Swoop has quite a large presence in Ireland, and Enterprise Ireland is a government trade agency, actually invested in Swoop and a strategic investor. So they helped us really launch in the market, and I give a special shout out to Scott Patterson. He Scott Patterson, he's the APAC FinTech lead, so he's been fantastic. So get in and speak, whether it's with DIT, the FinTech guys in there, or Fintech Australia, all those organizations, they're all fantastic. They're all happy to help. But there's another couple of areas I would really highlight, drilling down on. Firstly, leverage UK and Irish companies that are in the same situation. There's dozens of UK companies out here who are fintechs. I think it's 70 that have helped here. Speak to them people, get those in your network, because they're in a similar position. They're likely to have a small team. They're likely to build networks. So ask help from them, but also supply help to them where it's possible. Build your network around those people. They have been an invaluable resource to us launching. So to give an example of that, we partnered with DIT, Department of International Trade UK, and a company called Futurely, an accounting software company from the UK. We both target accountants, so we came together, organized a webinar, and what we were able to do then, because the power of us all being in the accounting sector, being supported by the UK government, we were able to attract the CEO of the Institute of Public Accountants, one of the largest member associations for accountants in Australia, to chair that webinar, which is about UK accounting technology coming into Australia. And we were able to attract a huge amount of people to that webinar, and was really successful. So cultivate the people that are in the same position. Aside from that, leverage the UK people that are in the companies, or Irish people in my case, but I'm from Northern Ireland, so I straddle kind of both ends. So what I'll do if I'm looking to get into a bank, if I'm looking to get into any fintech, is I'll go on LinkedIn, I'll look and see who's from the UK, and I'll say, listen, we're from the UK, we're looking to speak to you, can you please help me out? And I'm telling you, it works. So I leverage that, the people who are there, who are looking to help you, and are a friendly ear, essentially. But the last thing I will say, it's more on a brighter or a broader strategy point, is there are effectively two pathways to opening up a business in Australia, a fintech like this. You're either setting up a division in Australia or APAC that is autonomous, completely separate from your business, and it's going to be different from the headquarters, or you're coming and you're going to try and broaden your business and be consistent on your offering across the market. At Swoop, we've went with the second option there. We've tried to keep our offering and our tech platform as similar as possible. There are pros and cons to each, but it will affect your go-to-market strategy in terms of recruitment, in terms of partners, and a whole host of ways. So are you trying to keep a consistent company, or expand everywhere in the world, or is Australia going to be, I suppose, a company within a company? And getting that right is very important.
I just want to quickly add to something that Stephen said that I forgot before. Another good way to surround yourself with, like-minded people is to sit in one of the fintech co-working spaces. So obviously there's Stone and Chalk in Melbourne and Sydney, and YBF in Melbourne and Sydney, and they're a great opportunity to connect with other fintechs in the space. And I know that I've benefited from that network as we've moved between Melbourne and Sydney.
Sorry, Greg, could I put in one last point? I will finish on that. Was if you are going to start a company in Australia, do come out here. Come out here. So I can't wait for the guys to come out here so we can meet the founders. There's still a huge amount of value face to face. So make sure you get as many people over here as possible as you can when you come to launch.
Yes, that might be a little bit difficult in the meantime with hotel quarantine, but when the borders do open, I would agree with that. I don't know if I could actually do hotel quarantine. Good luck to anyone that's done that. Jonathan, my final question for you today is, what advice would you give to companies looking to enter Australia in terms of working with regulators?
I'm going to take a very broad perspective and simply say that you need to understand what you want to do. Now, we can help you to some extent, but one of the biggest challenges, and it's one of the frustrations I have doing these sort of events, is people often say it takes a long time to deal with this. But if I go and look at that person's application, you'll see gaps where we're waiting for a response for 90 days or something ridiculous. If you are informed, prepared and ready to have that meeting, happy to have that. Equally, quite happy, even if it's before the stage of partnering with someone or whatever else model you may choose to enter here, happy to discuss the financial services regime generally, just so you understand what you're looking at here, and you can make a more informed decision on what path you want to take moving forwards. The main thing is that you understand what you want to do and try and understand the regime so we can try and help you get where you want to go.
Jonathan, you almost stole my connector there, and I was going to say my advice to everyone is to engage early with the regulators, and you've touched on that. So my advice to everyone on the webinar would be always to start the conversation earlier, because it'll make it easier when you're ready. Last one, but not least for you, Ian, what are the areas what areas do you see as a significant opportunity in Australia?
Yeah, look, I think we touched on a little bit earlier around RegTech. I mean, it's still, post, the Royal Commission that we had, which we can often sort of forget about given COVID, but there's still an extraordinary amount of expenditure, whether it's remediation or, risk management and compliance work and effort that's been undertaken by the industry. I think all of the incumbents, I think, would agree that a lot of those efforts have often been throwing bodies at risk and compliance endeavours, and I just think we're not going to be able, and the industry is not going to be able to sustain that sort of analog mode of risk and compliance. I think there's enormous opportunities around fulfilling risk of regulatory compliance requirements, but doing so at significantly less cost. So I think that's important. I think more broadly, the other one as well is just from an operations perspective, notwithstanding, we often talk about the banking industry here as having, on a world basis, sort of, reasonably low cost to income ratios. I think there's an enormous amount of inefficiency still in our system. So to the extent that you have capabilities, services that can help streamline, re-engineer, make a step change in the effectiveness of operations, whether that's through the application of machine learning, AI, or distributed ledger, I think is another significant opportunity for offshore companies. And like anything, if you've got something that can help in a low growth revenue environment from a customer proposition standpoint, then again, I think there's a lot of upside in the Australian market from that perspective.
Thank you so much. With 2 minutes to go, I would like to thank all our panelists. Normally I'd ask the audience to give a round of applause, but it's very hard through a webinar to do that. So I would like to thank you for joining us today and giving up your hour. I would also like to thank the attendees, and most of them are in the UK or in Ireland, so I appreciate you getting up so early in the morning. And I'd also like to thank Austrade for putting together such a wonderful panel this evening, and also being a wonderful partner of Fintech Australia. I hope everyone has enjoyed this session of the Intersect digital program, and for those that are coming or attending virtually, I look forward to seeing you in the next 2 days. So thank you again. Please feel free to reach out to me. My email address is rebecca@fintechaustralia.org.au. So thank you and goodbye to everyone.
Thanks, everyone.